All righty, and we are live here today. Welcome to today's Money Monday. My name is Maggie Nielsen, and I'm a partner here at Purse Strings. Purse Strings puts on these lives every week to bring tips, tricks, pieces of advice about finance for women. But then when you're ready to go, let's say buy a house, get a will, plan for retirement, maybe you're having kids, you need a financial professional by your side. We have top tier financial professionals willing, ready, and able to serve you, and we call those our Purse Strings approved professionals. Jodie Lamb is one of them, and we are excited to have her on today. And we're going to be talking about structured settlements, which I think is new to a lot of us. It's newer to me as well. So I'm excited to dive in there. But Jodie, before we get started, can I have a little intro of who you are and what you do?
Gladly. Thanks for having me, Maggie. My name is Jodie Lamb. As you mentioned, I'm a structured settlement consultant. But before that, I am a mom of 14-year-old twin girls right now. They are my giant science experiment in trying to prove me wrong. With all things being equal, how different can they end up being? They're very unique little people, but I love it. They keep me on my toes. I've been in the insurance industry for 25 years, and I've been facilitating structured settlements for 17 years now. Last year, I was responsible for nearly $100 million of investments and taking care of people's future needs. So I love helping people, whether it be baking Christmas cookies for them, or putting together charcuterie boards, or helping them plan their financial future. I love what I do, both in and outside of the office.
Awesome. Well, we're excited to have you on today. When you were first starting that story, I thought you were going to say you have 14 kids. And I was like, I've met you. I know you don't. 14 twins. Got it. Okay. Either way.
So there's a woman I know on LinkedIn who has 15 kids, and she titles herself as America's super mother. And I think anyone who has 15 kids deserves to name themselves whatever they want. And, you know, if you've got more than a dozen, you're more than super in my book too. So
yeah, we'll have to talk more about that because Barb is one of 13. Yeah, but yeah, it's rare to see these days. But today we're going to be talking about structured settlements. So let's just dive in by like, what is a structured settlement and how does it work?
Sure. Well, I mean, at one point, personal injury and wrongful death claims were only settled with an exchange of lump sum money. Unfortunately, cash settlements that are meant to last for decades are often exhausted within a few years. We know this story from the lottery, winning stories, horror stories, or the professional athletes. They get an abundance of money and it's gone, even before their careers over, but often shortly after their careers over. People just are not good, or don't have the resources or the experience to make money last long term. Structured settlements are given to injured parties at a time of settlement that includes periodic payments over time rather than a single lump sum payment. Structured settlements are a long-term payment plan, often awarded to injury victims who sue or plan to sue the responsible party. And these types of settlements provide more flexibility and financial stability than the single lump sum payment. Plus, they have unique, advantageous income tax treatment.
Interesting. Okay, so we are, for those of you who are even more new to this, these are like when you get into an accident and you might get a claim. Sorry, dog, stop crying. This is like when you get into an accident and like you might get an insurance claim or something like that. So these are kind of these rare, I want to use this as a term of like a rare once in a lifetime kind of thing that might happen to you. Which I think is so interesting about this is because you don't know what it is until you need it, and you want to make sure you do this process right. And so then you break down these settlements and to come into different smaller payments, correct? So people can make that money last them longer.
Absolutely. So the structured settlement benefits are customized and they're individualized for each individual case. They're tailored to meet that person's needs. Those benefits can be made monthly, annually, quarterly. It can include lump sum payments. It has any duration, any deferral. There's no early penalty for payments too fast or too long. And it can be guaranteed for life. They're stable and secure. The state laws strictly regulate the type and quality of investments that insurance companies are using and allowed to make. In addition to, you mentioned the tax-free, when it's a physical injury case, it's completely tax exempt at the federal and state level, whereas investment earnings of a settlement that they invest after they take that settlement money is generally taxable. So a structured settlement provides capital protection. Unlike traditional investments, they are less likely, they're not going to lose money due to fluctuation in the financial markets when it's backed by an annuity. There are some variable options that are obviously not subject to that explanation, but it's an option. In addition, the traditional structured settlements are low risk. They're often funded with annuities from major life insurance companies or U.S. Treasury obligations. The risk to avoid trial and help facilitate settlements often are a consideration. There's no money management fees. In fact, there's no fees to even work with me. If a case settles with a structure, we get paid by the life insurance company. The parties settling the case, the attorneys, the injured party, the employer, the insurance company, they don't pay anything for us. So to consider an option to settle prior to settlement or at time of settlement costs nothing. It gives injured parties opportunity to evaluate what their choices are and choose what's in their best interest. But after the claim settles, it's too late. Once they have constructive receipt, that the attorneys touch the money, they have the check, in their bank, the IRS says constructive receipt has been triggered. Therefore, any future investments are now going to be taxable. Unlike if those payments were built into the terms of the personal injury settlement, all that growth and future payments are tax-free. And that has significant value.
That's huge.
I have a case that we are wrapping up right now. We're going to be structuring just shy of $5 million. We've blended a lifetime guarantee on the fixed annuity portion with a blend of a market-based investment. The projected payout at a conservative rate of return or conservative hypothetical is over $83 million.
Wow.
Tax-free.
Wow. So there are a lot of nuances, it sounds like, and you want to do these things right the first time because like most legal things, once they're locked in the books, they're locked in the books and that's done. There's no touching them again. So these processes, and we were just talking about this with divorce as well, sometimes there are things we might want to rush through and that could cost us millions. We need to slow down in these processes to make sure that they really, we're using them to the best of our advantage. And so who is eligible to receive a structured settlement?
Well, that's a great question. It depends on the type of claim. Not all cases that settle with the structure involve personal injury. The most common do. And if you are injured in an accident, you've been hurt on the job, or you've been, maybe it's a liability from a neighbor's house, a dog bite, you've been in an auto accident, commercial auto line policies, or medical malpractice cases where someone's been physically injured. We work with all of those people. We work with their attorneys. We work with their insurance companies, their employers, their healthcare employers or healthcare benefit companies, because if they have medical expenses that need to be repaid, they often have to be included in the terms of settlement. So negotiating that is often someone else that we'll work with. But on cases without personal injury, they could include people that are involved in sexual harassment cases or discrimination cases, wrongful imprisonment or wrongful termination, construction defect claims, E&O and D&O claims, environmental claims, contract disputes, sale of property, and business practices of $500,000 or more. Now, while they don't get the same tax-free growth benefit as a personal injury case, they get the benefit of a tax-deferred payment. So they're mitigating their tax liability by stretching out payments over time and qualifying in lower tax brackets so that their overall tax liability is reduced. So for example, in a $500,000 wrongful termination case, the individual is going to be responsible for taxes. And each state's different, but federal, state, whatever. Roughly, the net allocation would be about $373 after those taxes. If they spread those payments out for 10 years, not only is the full, well, let me back up. Let's say they're going to take $100,000 of the $500,000, and they're going to invest $400 paid out over 10 years. That 10-year payout is going to reduce their taxable liability for the benefits that they receive in any given year. So they're not going to be at the highest tax bracket. They'll be at a lower tax bracket. Plus their money is growing during this deferral and payout period. So if they elect to pay out over 10 years, now these are based on prior numbers, so they will fluctuate, but based on a prior quote, the $500,000 settlement, 400 of which was structured and 100,000 was taken into cash, their tax liability was reduced to almost just a little over $60,000 versus $126,000 if they took it in a lump sum. Their overall take home is going to be $526,000 before taxes. And they're going to recover, they're going to recover more because their tax liability has been cut in half.
Got it.
They're essentially getting another $60,000 in recovery by mitigating their highest tax bracket in year one.
That makes a lot of sense. Yeah, because the higher the tax bracket you go, the more they take. And so if you can consistently stay at a lesser tax bracket, it's less money going to taxes in the long run.
Pay less in taxes.
Yeah, and that's always the goal,
And that applies to like people that are buying out businesses or transferring real estate or it's not just limited to personal injury cases, and that this world of the non-personal injury is not penetrated. There's so much opportunity for growth here with real estate transactions, business succession planning, contract disputes, even attorney fees. So attorneys, when they're receiving settlements for their clients, the attorneys can defer their taxes the same way as well. So they can customize plans that take care of their own kids' college or supplement retirement income. Most proprietors don't put aside money for their own retirement, but when they can defer taxes to grow or defer their income and grow tax deferred and customize when the benefits are paid, potentially and ideally in a lower tax bracket, AKA retirement or over time, they recover more as a whole.
Interesting. Yeah, that's why we always talk about, you need multiple professionals on your team. And that's why you do want some who understand these taxes and understand these different nuances, because there are different ways to kind of spread things out to pay less in taxes. You just have to talk to someone to really understand those finite details.
Absolutely. And by no means am I an expert in all things taxes. We have other, tax professionals. The tax goes thousands and thousands of pages. Yeah. We work within this tiny little minute section that deals with the section 104A2 in regards to the future payments of tax or personal injury settlements. And it's been expanded upon to include other things like contracts and the non-personal injury cases that, I kind of alluded to. But it's a fun place to be. I love what I do. I get to meet financial planners across the country because often they get contacted by the families or the attorneys that are helping families negotiate personal injury cases. They're coming into a large amount of money. The attorneys want to make sure that doing right by their client. So they call their financial advisor, a planner. I've found through Purse Strings Network and WIFS, a lot of people in the financial world don't know about structured settlements. And to be honest, I didn't know about it myself. My background, right out of college, I did financial planning. I was with Park Avenue Securities and Guardian Life. I did that long enough until I realized right out of college, I didn't exactly have enough life experience to be talking to people or talking to my family's friends about retirement planning. I was just this kid out of college.
Yeah.
But I started working with the insurance company. I kind of got behind the scenes and started to understand what's going on. But in the process, I gained the knowledge of handling personal injury cases, managing financial investment products, helping with financial planning. And that is when I found out about structured settlements. I had already had my Series 6, 67 life health annuity license. I'd gone through multiple years of continuing education. I hadn't heard of it. And quite frankly, attorneys don't really understand or know about it either. You know, they're in law school to learn about law, not tax code. So this tiny little section that talks about personal injury cases and being able to structure their fees or structure their client's money is a footnote probably at best. I'm not an attorney. I can't tell you what the law books say, but I can tell you based on my experience, until they understand, until they start to use it, the attorneys don't know about this opportunity and the significant value that it holds for their clients.
So when's the, ideal time in this process for somebody to call you and bring in your specialties? Is that after an accident? Is that, after they talk to their attorney? When's the best time to bring you in?
I mean, certainly there's not a bad time to call. If you have questions, if you were just involved in an accident, you're hearing about this for the first time, you want to know more, we can talk. My services really don't come into play until they're negotiating the claim or they've settled the claim and they're writing out the settlement details. Ideally, we are involved during and before the negotiation of a claim settlement or negotiation of a business transaction, because these terms need to be written into contracts in the release agreements. Plus, these are unique payments. Like, we are working with people that need a lifetime of medical care or a replacement of income, or children who can't take receipt of the money, or people that are on government benefits that we need to protect so they don't lose that benefit when they receive their settlement. So this involved the better opportunities to structure if we're involved before the case settles. So working in the terms of the agreement with both parties, the seller, the buyer, the plaintiff, the defendant, whoever's involved, the employer, the employee, having those conversations on the table when the case is being negotiated, when the terms are being negotiated, is the best time to bring this up. Not after the case settles, because they're unilaterally changing the terms of the settlement at that point. And either party can say, thanks, but no thanks. It's not what we agreed to. Right. So having us involved before the case settles is preferred. It's not too late. If you settle a case and your client has already said, hey, I'm going to give XYZ amount of money, what can I do with it? And you're like, oh my gosh, if you haven't touched the money yet, you need to talk to Jodie, because Jodie will be able to talk to you about options. I'll reach out to the employer. I'll reach out to the insurance company or the attorneys involved in the case, and we'll see if it's possible. Nothing's not possible until you're told no. Right. And if you don't know to ask, then you're never going to be given that opportunity. And that happens far too often. Most people don't know that this opportunity exists. Right. And if they do, it's too late. And as you said in the beginning, this is a once in a lifetime opportunity. And I don't want to sound like a car salesman here, but the reality is that no one wants to be in an accident to begin with, right? Right. Let alone to the catastrophic nature that requires or would warrant this conversation. Yeah. So to be in this kind of an accident is unfortunate. It's even more unfortunate if you are settling your claim and leaving money on the table, whether that money is in growth or taxes or flexibility or preservation or protection. Those are all value-added terms to your settlement, to their client's settlement, and something that financial advisors and attorneys can tell their clients about to enhance the the services that they offer.
Right.
I'm just one, I am a tool in the multitude of professionals that they work with. I have professionals in my network that I work with, people that help with Medicare ongoing reporting or compliance with Medicare set-asides or workers' compensation guidelines. These are all nuances that a structured settlement professional will bring to the table. We understand it may seem overwhelming and confusing, but this is what we do.
Yeah. That's why you hire a professional, and we like to really.
Why you hire, and this professional is free.
Yeah.
You know, it doesn't cost anything to have these opportunities explained and to evaluate to make sure to see if it makes sense. In the end, if they choose not to work with me, so long as they know what they're saying yes or no to, it's a win, because now they know about structured settlements, and maybe they will be able to have that conversation with a coworker or a peer or a family member who might be in a position that makes sense. Structured settlements don't always make sense, and we understand that. There's times where I'll tell people, you know, you would be better off for putting the money for this child in the block savings account or the registry of the court, because the parent shouldn't be taking control of the money until the child reaches age of majority and they get the money themselves. Yeah. You know, if they're 16 or 17 years old, that's like a year. And if they want all the money when they turn 18, the structure is not going to be viable. But for the parents that want to help guide their 18-year-old to making better financial decisions, or putting money aside for college, or down payment for a home, or just not to have a couple bad decisions and have it completely gone.
I'm just thinking 18 and having all that money, it's not going to end well. I'm not going to end up with a lot of that money.
Right. I mean, how many great decisions did we make when we were 18 versus how many decisions we were like, probably would have had a better outcome with a little more life experience. Right. And so for parents to have that influence, knowing that they can't just take all the money when they turn 18, stretch it out over time, teach time money management skills. These are all value added opportunities for families of minor children, for example.
And I'm just so glad we're having this conversation today, just because, you know, there's so many nuances, and it's not like people need to walk away knowing every detail, but knowing that this opportunity is out there, that it's a thing, that there are people to help you, what their services cost, how to contact them, just some of these basics, because I feel like in one of these structured settlement times, it could be a lot going on, especially, let's say, if it was a really debilitating car crash or something like that. Like, you have 1,001 things to manage, but to know in the back of your head that, like, I remember I saw that thing and I can make the best of this money is kind of all we need to really start connecting those dots and having these conversations. You know, you don't need to know about all the tax things. Just know, I know there's something about the taxes, and I should, you know, call Jodie or talk about a structured settlement. And I like how you stressed it's just a conversation. It's just understanding our options. And sometimes it's not the best option. And I'll let you know that too. It's not, you know, one way or the other. You're not trying to build business. It's just, let's make the best of, you know, the situation at hand.
We're building relationship, we're building knowledge, we're supporting people to make their best decisions that support them. So absolutely, this is a conversation. I mean, it even goes down to, I'll talk to people about, you know, their own personal policies. If you are looking at your auto policy and you're involved in an accident, what does that mean for you? Are you insuring your family for the same amount that you insure a total stranger? I can tell you, personal story here. My sister-in-law and her daughter were in a horrific accident about a month ago. Head-on collision. The passenger in their vehicle died. Both my niece and my sister-in-law were touch and go for weeks. She has only just now been released into long-term care, but for the longest time, it was terrible. And so my brother-in-law has called me, and or my ex-brother-in-law has called me and asked me, you know, Jodie, what do we have? What does this mean? Right. And he had $1 million umbrella policy. He had a little bit of hope that, you know, we know that we have policy limits cases here. We've got a fatality. We've got catastrophic injuries and state minimum policy for the at-fault driver. What is my policy going to do for me? and he was very disappointed. First party coverages are not automatically covered on liability policies or umbrella policies. So if you have an umbrella policy, ask your agent, does this include my family or just another party? You're asking for first party coverage, because if you're going to be insuring someone else for an accident that you cause, above and beyond your own auto policy, my personal opinion and reflection based on the first serious claim I handled as an adjuster was, I'm going to insure my family for the same amount that I'm insuring for a total stranger. Mm-hmm. So even beyond, what I do to help with structured settlements and at a time of settlement of the claim, for people to understand what's in their policy is important, so that they know before a claim happens what's going to be covered. They know how their policy is going to help an injured party or their family.
Yeah, this first party coverage is new to me, and I'm very, feel like I need to go look into that even more now. And that's the thing, is sometimes we try to cut or save money on our insurance and different things like that. We always call them up. How can I save money? But I want to save money, but continue my great coverage. We don't want to cut these things that are really necessary, like, first party meaning me, right?
Yes.
That first party coverage. That's a great tip.
Yeah. Ask your agent, ask me. I'll happily look at it and help you. I'm here to help people understand, but also share this knowledge with people that your clients are reaching out to you. Ask them, if you've got an attorney client, ask them, are they utilizing structures? Ask them on their own policy, would your coverage protect you? Would your client be interested in preservation of funds? Do they need ongoing medical help? After the claim settles, most attorneys don't want to babysit their injured party claimants, but some of them need a lifetime of help. And so we bring in partners to help that transition for them. So we're just, one additional asset to the negotiations of personal injury cases, to contract resolutions, to real estate transactions, the business succession, for unique and customized tax advantageous investment choices that aren't available after the fact.
Yeah. I love that. I love it. It's been you've shared so much great information, so much food for thought, just getting wheels turning today. Is there anything that we didn't touch on that you want to make sure is shared with our audience?
Well, I see the information there scrolling at the bottom, which is fantastic. I would like to share, I think one of the biggest things that turns the heads of financial advisors that I work with and usually prompt a call, and the humbled call of, I don't know about structured settlements. Can you explain this to me? But that $83 million example, there's no tax on interest, dividends, capital gains.
It's wild.
That is significant. And when they understand that, they understand that a structured settlement, again, isn't the end all to solve all the we're not looking to take the whole settlement and put it into a structure, but it is a tool to be able to provide another means of diversified investments. Mm-hmm. Short of your Roth IRA or your Roth 401k, you have very limited tax-free investment options.
Right.
And this one doesn't have the requirements of, you have to wait to a certain age to get the payments, or it has to be one benefit stream. I can do multiple benefit streams, any duration, any deferral. It can include annual increases. It can be guaranteed for life. We can take life expectancy into consideration. And then we also blend it with a market-based investment. So we work often with financial planners to make sure that, the bigger picture is addressed, mm-hmm. and we maximize opportunities for recovery and unique investment options that are otherwise not available outside a settlement.
I love it. I appreciate you coming on and sharing this expertise and getting the wheels turning and giving us some knowledge, because I know this is so new to a lot of people, which I know you've experienced before. And so if anyone has any questions about this, wants to learn more, wants to get their policy looked at, needs to have this conversation, don't be afraid to contact Jodie. She's willing, ready, and able to have that conversation. Her email's been going through the bottom here, jlamb@teamarcadia.com. You're also one of our Purse Strings approved professionals, so they can find you on our site, pursestrings.co. And just, remember these little bits just in case anything happens one day to you or a friend. You have this great knowledge now of, that there are structured settlements out there, that there are professionals that can help you, and clearly your wealth of knowledge.
You know what? Let me also throw my number out there, just because sometimes spam filters catch me and I don't catch it. So I can be reached by phone. My office number is 480-253-3761, or my personal cell 614-805-7969. And I'm also on LinkedIn, Jodie Lamb.
Awesome. Awesome. Well, thank you again, Jodie, for coming on today. We'll be back here again next week. But until then, be financially fearless.
Thank you, Maggie. Have a great day.
You too. Bye-bye.
Bye.